Thank you so much for joining. We'll be getting started momentarily. Okay, great. So I see the viewers have logged in. Thank you again for joining. Please like this video and please subscribe to our channel for weekly notifications of our weekly webinars. Today's session, we're going to be going over the latest proposed IRS reporting rules for cryptocurrency. And we'll talk about some of the advantages of investing in cryptocurrency via a retirement account as opposed to a non-retirement account. We'll also talk about some of the advantages of doing so via an IRA LLC as opposed to doing so via an IRA. So as I mentioned, this is our agenda. So we'll jump right in first by setting the baseline is in terms of what is cryptocurrency and the taxation considerations that have already been established prior to this week's announcement regarding the proposed IRS reporting rules. And I would also note that I'll be fielding questions. Just ask questions in the chat. Again, please like and subscribe. If you're watching as a recording, you can ask questions in the comments. As well as you can jump ahead, as we'll post chapter links, you can jump ahead to certain sections of the video. So to set the baseline, what is cryptocurrency? Cryptocurrency is considered to be virtual currency, and popular cryptocurrencies are Bitcoin, Ethereum, Litecoin. IRS Revenue Ruling 2019-24 establishes that. The taxation of cryptocurrency per IRS Notice 2014-21 is that it's treated as property, personal property, as opposed to real property or real estate for federal tax purposes. So outside of a retirement account, that means that gains, for example, on the sale of cryptocurrency will be subject to capital gains tax rates, whether short-term or long-term, as applicable. Inside of a retirement account, those gains are tax sheltered or tax deferred, potentially even tax free if you're investing via a Roth solo 401k or a Roth IRA LLC. And one exception would be if you were investing in mining cryptocurrency or potentially other activities that are similar to mining cryptocurrency. To the extent that that is considered to be an active trade or business, that would incur unrelated business income tax. Anytime you have income from an active trade or business inside of a tax shelter, like a retirement account, you need to think about whether or not that's subject to unrelated business income tax. So now that we've set the foundation, let's take a closer look at what has been proposed this past week. So the US Treasury is proposing to increase the IRS reporting requirements for cryptocurrency transactions. And so this, of course, is coming from the current administration. It's really in the context of, raising revenue. They're also looking at it in terms of detecting criminal activity based on the stated regulatory objectives. If we look at the current reporting rules, cryptocurrency exchanges would need to do reporting on a 1099-K in a situation where someone has more than 200 transactions and more than $20,000 in gross proceeds. So this is a steady drumbeat from the regulators of increased regulatory focus. If we look at the broader context, for example, the regulators have identified cryptocurrency as an enforcement priority. If you also take a look at IRS Form 1040, your personal tax return, there's now a line to list certain cryptocurrency transactions. So in that context, again, it's just part of that trajectory of increased regulatory focus. Now, what we can glean from the proposal, which, keep in mind, it's not in the form of I would say a formal proposal. It's more in the form of a report. However, there is certain certain things that are noteworthy, I would say, in what's been proposed. First of all, who would be required to report? So there seems to be two categories. The first category would be cryptocurrency, or what they refer to as crypto asset exchange accounts and payment service accounts that accept cryptocurrency. Presumably, an example of the latter would be something like PayPal. Now, while the headlines of this week's announcement refer to a $10,000 threshold, if you look at the language of the proposal, it doesn't limit the proposed reporting requirement to transactions greater than $10,000. In other words, on its face, it appears that the idea is that even transactions less than $10,000 would be required to be reported by the cryptocurrency, with respect to a cryptocurrency exchange account, or again, a payment service account that accepts cryptocurrencies. The second category from the proposal that we can identify in terms of who is required to report are businesses that receive crypto assets with a fair market value of more than $10,000. So perhaps an example here would be, for example, Tesla, where they, at least at one point, were indicating that they were willing to accept payment for their vehicles in cryptocurrency. So in that situation, again, under the proposal, if a business accepts cryptocurrency with a fair market value of more than $10,000, the proposal seems to be that that business would need to report that transaction. Now, it's interesting to note that the guidance even compares this to the current requirement for a business to report cash transactions of $10,000 or greater. And if we also analogize to SARS reporting, suspicious activity reporting, although it is noteworthy that the proposal didn't specifically mention those, but in that same context, there's also this notion of related transactions. So if something's deemed to be, say, two $5,000 related transactions, it's possible that they may lump it together and then impose the reporting requirement. And again, looking at the regulatory objectives, I would just note again that it appears to be detection of criminal activity and, of course, tax collection. So please don't hesitate to ask questions as we go through these slides. Otherwise, we'll keep going forward. Thank you again for taking the time to watch. So now, after hearing this proposal, let's look at advantages of crypto investing in your retirement account as opposed to investing outside of a retirement account, in a personal account, for example. So one thing to mention is that one advantage, of course, is that if you invest via a retirement account, those gains are going to be tax sheltered or tax deferred, and potentially even tax-free if you're investing in cryptocurrency via a Roth account, such as a Roth solo 401k or a Roth IRA LLC. And of course, you need an account provider that's going to allow you to invest in these types of investments. Of course, we do. Our Roth solo 401k and our Roth IRA LLC would allow for investing in cryptocurrency. Another advantage is going to be simplification of your taxes. So because cryptocurrency is considered to be personal property for tax purposes, that is certainly going to increase the tax burden, because that means that, therefore it's going to be subject to capital gains tax. But in order to determine the tax that would apply, you're going to need transaction history about the fair market value throughout the time that you held the cryptocurrency, so you can determine your basis. You need to also know how long you held it, right? And you might have different buckets of cryptocurrency that you bought over a certain period of time. So a question might be, which bucket did you sell, right? In order to determine whether those gains are subject to short-term capital gains or long-term capital gains. It's also noteworthy that many of the exchanges, they may not have the robust systems, so you would really be on your own to gather this information and be able to document that in your file, as opposed to, of course, if we were thinking of traditional brokerage firms, which of course have much more robust systems, all things being equal. So that's important to consider. Now, of course, if you're doing it through a retirement account, those gains are tax sheltered or tax deferred. So you do want to, of course, have a history, have good records, but the stakes are not going to be as high in the sense that you're not actually figuring out how much tax you have to owe as you're making those transactions inside of your retirement account, because it's tax sheltered or tax deferred. Now, one practical impact to increase reporting is going to be the importance of opening the cryptocurrency exchange account under the EIN of the solo 401k or the LLC in the event that you're investing your retirement funds via an IRA that owns an LLC. Because that means that whoever is doing that reporting, let's say it's the cryptocurrency exchange, will do so with respect to the EIN or the tax identification number that was used to open the account. So if you're opening that account under, say, your business EIN or your social security number, and now the exchange ends up reporting that transaction to the IRS, that is going to create a lot of confusion with the IRS, because they would be then under the impression that you did that transaction in your own name. And then if you're not reporting it on your 1040, of course, that could trigger a number of questions or even a formal inquiry. Whereas if you're doing it under the EIN of the solo 401k or the LLC that's owned by your IRA, then that'll help clearly demonstrate that this investment was done as on a tax sheltered or tax deferred basis. And of course, with our customers, we obtain the EIN for the solo 401k in the event that you're doing so, investing via solo 401k or through the IRA LLC. We obtain the EIN for the LLC in the event that you want to invest under that structure. So again, please don't hesitate to ask questions. Otherwise, we'll keep going through the slides. So now we want to turn to looking at some of the advantages of investing in cryptocurrency via an IRA LLC as opposed to directly through an IRA. So of course, there are options to invest via an IRA. However, those options are generally going to be limited in terms of the range of cryptocurrency exchanges. Because if you want to invest via a particular exchange and you don't want to use the IRA LLC structure, let's say you want to do it via an IRA, then of course that exchange would have to offer an IRA option, and many of them don't. However, there are many that do allow you to invest in the name of an LLC. So in that case, if you have an LLC that's owned by your IRA, then you could open up an account at that exchange under the name EIN of the LLC, and then effectively you'd be able to invest via that exchange. Another advantage of the IRA LLC structure versus the straight IRA investment structure is the ability to store the cryptocurrency in a physical wallet. For example, with our customers, the way that the LLC account at the cryptocurrency exchange is funded is by transferring the funds from a bank account in the name of the LLC over to the account in the name of the LLC at the cryptocurrency exchange. And so if your preference is to store the cryptocurrency in a physical wallet, you could easily do so in a safety deposit box associated with that LLC bank account. Whereas if you tried to do so via an IRA, it's certainly questionable how easy it would be to open up an IRA account at a bank and have a safety deposit box attached to that IRA account. Third, if you want to invest in private transactions, by having that LLC bank account, in other words, outside of the context of an exchange, and you wish to purchase, say, cryptocurrency or sell cryptocurrency that you already own inside of your IRA LLC to an unrelated person. So you want to buy or sell cryptocurrency with an unrelated person. Of course, it's going to be very difficult to do so if all you have is an IRA account. Because that exchange that maybe opened up an IRA account for you may not allow you to transfer it outside of the exchange. Whereas if you have an LLC bank account, it's going to be much easier to complete that type of transaction. And then lastly, you will have the ability, for example, with our IRA LLC product, to invest in other alternative investments. And you'll also have checkbook control. So that IRA LLC that you have, you can invest in cryptocurrency, but you could also invest in other alternative investments. For example, you could invest in real estate, you could invest in notes, you could invest in precious metals, and you would have a checkbook associated with that LLC bank account where you are the manager of the LLC. Of course, your IRA is the member. And with that checkbook, you can easily make those investments quickly in the name of the LLC. So those are some good considerations as you think about how you want to make these types of investments if you're doing so via an IRA. So that takes us to the end of today's webinar. Thank you again so much for participating. We certainly appreciate you taking the time to do so. We would ask you to please like and please subscribe to our channel. We do have more time. If you have questions, please don't hesitate to enter those into the chat. Or if you're watching on a recording, please just simply, you can email us at business@mysolo401k.net, or you can add a comment in the comments on the YouTube post. Thanks again, everyone. We really appreciate it. Thank you.